in attendance. Your presence here today is a strong testament to the shared commitment of our region towards deepening cooperation and advancing integration in the crucial sectors of the finance and investment. We are honored by your participation and look forward to fruitful deliberations. Before we proceed, I would like to just acknowledge the distinguished honorable ministers and members that are present here today. We have Honorable Prof. Mthuli Ncube, Minister of Finance, Economic Development and Investment of the Republic of Zimbabwe, and Chairperson of the SADC Committee of Ministers and Finance and Investment, and Co-Chairperson of the SADC Peer Review Panel. We have Mr. Enoch Godogwana, Minister of Finance of the Republic of South Africa. We have Honorable Minister Dr. Situmbeko Musokotwane, Minister of Finance and National Planning of the Republic of Zambia. We have Honorable Ministers, Deputy Ministers, and representatives from the Finance and Investment Ministries. Some are online. We have Dr. Innocent Manche, Governor, Deputy Governor of the Reserve Bank of Zimbabwe, who is also the co-chair of the SADC Peer Review Panel. Governors of central banks from SADC member states. We have His Excellency, Mr. Elias Makhosi, who is the SADC Executive Secretary. We have Ms. Angel Makombo Mtumba, who is the SADC Deputy Executive Secretary for Regional Integration. We have Mr. Joseph Veresha, Chief Director of Economic Affairs in the Ministry of Finance, Economic Development and Investment Promotion, Republic of Zimbabwe, who also serves as the co-chair of the senior officials of this committee. We have Ms. Ayanda Moholo, Senior Manager, Regional Engagements and Head of Committee of Central Bank of Governors Secretariat and co-chairperson of senior officials of this committee. We have Dr. Kennedy Kaziputalimba Mbekiani, African Development Bank Group Director General for Southern Africa. Senior officials from the respective SADC member states, Mr. Sadwick Mtanakuta, Director of Finance, Investment and Customs at the SADC Secretariat, SADC Secretariat and officials from the government of the Republic of Zimbabwe, representatives of the media, ladies and gentlemen, again, a good morning to you all. Honorable ministers and distinguished delegates, once again, I extend a warm welcome to you all to this important event. This ministerial committee that plays a vital role in coordinating the work of our region in the areas of finance and investment and in providing strategic policy advice to the SADC Council of Ministers. We are honored by your participation and look forward to impactful engagements and outcomes from this meeting. Allow me please to just go through the program of the official opening. We will start with opening remarks from His Excellency Mr. Elias Makhosi, the SADC Executive Secretary, which will then be followed by our keynote opening remarks by Honorable Professor Mthuli Ncube, Minister of Finance, Economic Development and Investment Promotion of the Republic of Zimbabwe and Chairperson of the Committee of Ministers of Finance and Investment and Peer Review Panel. And then we will observe a photo session that will happen after we are done, and I will announce further in regards to that. It is now my honor to invite His Excellency, Mr. Elias Makhosi, the SADC Executive Secretary, to deliver his opening remarks. Your Excellency.
Thank you very much, our Director of Proceedings, Ms. Annette Mtambanet. Honorable Professor Ntuli Ncube, the Minister of Finance, Economic Development and Investment of the Republic of Zimbabwe, and Chairperson of the SADC Committee of Ministers of Finance and Investment, and the Co-Chairperson of the SADC Peer Review Panel. Yeah, I don't want it on my face. So. Honorable Ministers, Deputy Ministers, and representatives from the respective ministries in our midst, and those that are joining us virtually. Dr. Innocent Matse, the Deputy Governor of the Reserve Bank of this Republic, who also is the co-chair of the SADC Peer Review Panel, and distinguished governors from respective central banks of our region, my colleague, Deputy Angel Ntumba, Deputy for Regional Integration, the Director of Finance, Investment and Customs in the Secretariat, Dr. Kennedy Mbekweni, African Development Bank Group Director General for Southern Africa, all our senior officials from the SADC's member states, colleagues from the media, ladies and gentlemen, once more, a very good morning to you all. Good morning.
Good morning.
You sound so subdued, but good morning. Thank you. It is with great pleasure and honor that I welcome you, honorable ministers, distinguished governors, and your esteemed delegations to this important meeting of the Committee of Ministers of Finance and Investment, as well as the peer review panel. We are especially grateful to the Republic of Zimbabwe, the chairperson of SADC in particular, for the continued cooperation in organizing and facilitating these important regional engagements. Your presence here, honorable ministers, despite your busy schedule, and esteemed governors, reflects a shared commitment to regional progress, economic resilience, and strategic lasting cooperation. The global economic landscape is increasingly marked by volatility, shaped by heightened trade tensions, tightening financial conditions, and a confluence of overlapping structural challenges. The rise of trade distortions through both tariff and non-tariff barriers has deepened skepticism towards a multilateral system that is seen to have fallen short of delivering fairness and equity. In this climate, the call for trade re-globalization has never been more urgent, in my view. Diversifying trade partners and supply chains is not just a strategy. It is an imperative to reduce vulnerabilities, avoid overdependence on single producers or export markets, and ensure a more balanced sharing of risks and opportunities. For the SADC region, this is indeed a critical moment for deep introspection. As a region, we must engage constructively with the critiques raised by the United States and other development partners regarding our reliance on limited markets and few and concentrated supply chains. Doing so will enable our region to build resilience, enhance competitiveness, and assert a stronger presence in the evolving global economy. Honourable ministers, governors, it is widely acknowledged that the current global trade imbalances are not solely the result of trade policy failures, but are partly rooted in the underlying macroeconomic imbalances. Addressing these challenges requires more than tariff adjustments. It demands well-coordinated policy responses that acknowledge the link between trade and financial flows. The recent development in the global trade, including trade tensions and shifts in policy priorities, underscore the urgency of reviewing and reforming the current multilateral trading framework. Without such reform, the risks of financial instability and contagion will intensify, driven by currency swings, asset price volatility, technological disruptions in export-reliant economies, and the threat of capital flight. Now, more than ever before, a unified and forward-looking approach is a must for us to safeguard our economic stability and sustainable growth. In the face of shifting geopolitical developments and declining international financial flows, the SADC region must move swiftly and decisively to develop its own financial instruments that will safeguard economic stability and advance our regional integration. This, or the narrative, in my view, must be set and driven by ourselves, honorable ministers and governors, and no one else should drive it for us or set it for us. A central pillar of this strategy is none other than fast-tracking the operationalization of the SADC Regional Development Fund. You will hear us making this statement consistently and repeatedly at every forum. This fund is a critical mechanism to bridge the financing gap, channel investments into priority areas, enhance domestic resource mobilization, and reduce dependence on external funding sources. While still on the fund, allow me to provide an update on the progress achieved since your meeting last December. At that meeting, you entrusted me with a mandate to engage the African Development Bank Group to mobilize resources for the operationalization of the first stage, which is the proof of concept to cover operationalization and resource mobilization for the fund. Secondly, you directed the Secretariat, with the support of the bank, to spearhead implementation of this very phase. I'm pleased to inform the meeting that good progress has been made towards mobilizing resources that are required for the first stage. We have engaged the African Development Bank Group to mobilize these resources for the operationalization of that phase, to cover operationalization of resources as guided by yourselves. In January this year, the President of African Development Bank, President Adesina, reiterated the bank's commitment to support this critical implementation phase, marking an important milestone in our shared efforts to bring the fund to life. In fact, the President, I just met him, I think a couple of weeks ago, has assured us, honorable ministers, that this matter will be in his handover notes, prepared for his successor. We appreciate this level of commitment from the ADB to our region. A project proposal note has also been prepared and submitted to the bank to assess resources from the Targeted Support Window, or Pillar 3, of the Transition Support Facility, or TSF for short. The amount under this proposal is around $5 million US dollars, or unit of accounts. Looking ahead, a second request of additional resources targeting 10 million is scheduled for submission to the bank this July. Again, aligned with the proposal, with the first call for proposals of ADF 17. As part of efforts to mobilize resources for capital subscription, the bank has requested SADC Secretariat to engage with yourselves as member states to indicate your interest in mobilizing resources for equity participation in the SADC Regional Development Fund, either through the African Development Fund, or directly from the African Development Bank. According to the FDB, these expressions of interest from member states will enable it to begin preparing a formal funding proposal, thereby advancing the next steps in securing the fund's operationalization. It is therefore my humble view on plea to member states, yourselves in this room, to provide these expressions to enable the Secretariat and the bank to progress this important matter. I would like to express our sincere gratitude to the President of the bank, President Adesina, whose term ends this September. We are deeply appreciative of his gracious acceptance and unwavering support for the requests from the SADC Ministers of Finance and Investment for the bank to assist to operationalize our fund. As we prepare for this transition, we look forward to working closely with the newly elected ADB President, Dr. Saidi Oudta, in continuing this vital collaboration and advancing our shared vision for sustainable regional development. As I conclude, allow me to extend my sincere appreciation to Honorable Professor Mthuli Ncube, the Minister of Finance and Economic Development and Investment Promotion of this great republic, and our chairperson for his outstanding leadership and tireless efforts in guiding the work of the two committees. I also wish to thank our senior officials for their excellent preparations and dedicated efforts in ensuring the success of your meeting. I wish you, ministers and governors, productive and forward-looking deliberations as we continue to work collectively to advance the SADC regional integration agenda for the benefit of our citizens. Your Secretariat remains resolute in our commitment to serve our organization SADC and to drive progress across our region with dedication and integrity. I thank you for your attention. Merci beaucoup. Muito obrigado. Asante sana. Tatenda.
Thank you very much, Your Excellency, especially for highlighting progress made in the operationalization of the SADC regional fund that we are busy with the FNDP. May I now take this opportunity to now call upon Honorable Professor Mthuli Ncube, Minister of Finance, Economic Development and Investment Promotion of the Republic of Zimbabwe and Chairperson of the Committee of Ministers of Finance and Investment to deliver his keynote address. Honorable.
Thank you, Program Director. Honorable Ministers from the SADC member states, Governors of central banks from the SADC member states, His Excellency, Mr. Elias Mahosi, the SADC Executive Secretary, Her Excellency Mrs. Angela Makombo Ntumba, the SADC Deputy Executive Secretary for Regional Integration, senior officials from SADC member states, SADC Secretariat staff, the representatives of the media, ladies and gentlemen, a good morning to you all. Good morning. I feel privileged by capacity of the chairperson of the SADC Committee of Ministers of Finance and Investment and co-chairperson of the SADC Peer Review Panel to welcome you all to these meetings of the SADC Committee of Finance Ministers and Investment and the Peer Review Panel. More importantly, let me welcome you all to Zimbabwe, especially to this majestic Victoria Falls, one of the 7 wonders of the world, locally known as Mosi Uyatunya, the smoke that thunders. We will make this, we will make everything possible to ensure your comfort while you are here in Zimbabwe so that you can effectively participate in these meetings. I wish to take this opportunity to thank you, honorable ministers and distinguished governors, for reserving time out of your busy schedules to participate in these important meetings. Surely your presence not only gives value to these meetings, but evidence of a commitment you have made towards regional integration within the SADC region. Honorable ministers and distinguished governors, the IMF has revised its global growth forecast for 2025 to 2.8%. This is down from 3.1% in 2024. This is signaling a decline in growth expectations. Key factors influencing this adjustment include shifts in global trade and macroeconomic policies.
over 50% of developing countries are grappling with rising debt levels, leading to significant debt distress and financial instability, with debt repayments having increased by 35% since 2023. While this poses challenges, it also introduces upside potential for foreign investment in well-managed economies. Emerging markets face the dual pressure of maintaining fiscal discipline while increasing spending on healthcare, education, and infrastructure sectors that offer significant opportunities for private investment and partnerships. This challenge is compounded by limited fiscal space, which restricts their ability to respond effectively to economic shocks and support growth initiatives. Honorable ministers and distinguished governors, over the next decade, 360 million young people in Africa will attempt to enter the workforce. That is expected to only offer opportunities to 150 million. This is expected to only offer opportunities to 150 million, as I say, leaving 210 million outside the job market. So only 3 of every 5 young people will be able to access a job. Therefore, the urgency of finding scalable and sustainable solutions has never been greater. Addressing the static employment gap is paramount, and opportunities for business investors exist. If you allow me to indicate at least 4 key opportunities, if I can proceed. So the first one is on high growth sectors. In the area of artificial intelligence, fintech, renewable energy, and agribusiness, these are poised to create jobs and foster innovation. Colleagues, if you know how to program in Python, it doesn't matter whether they're sitting in Victoria Falls, in Maun, or in Polokwane, or anywhere, frankly, near Morogoro, it's Python. So when it comes to ICT, we are at the same level as Africans, as everybody else globally. What we are lacking is strategy, systems, and the right platforms. I move to the second area, workforce development. Vocational training aligned with industry needs to be supported. Here in Zimbabwe, for instance, we've got what we call Education 5.0, which has shifted our education approach towards skills developing, making sure that those who come out of our higher education institutions are more job ready, either to get to the workplace and be productive, or to seek their own individual entrepreneurship opportunities and employ others and themselves in the process. 3, innovation and SMEs. Supporting entrepreneurship and private sector innovation can boost productivity and employment. Colleagues, here in Zimbabwe, we've realized, and I've moved around and worked around SADC for the longest while, that what is lacking is startup capital. That's the biggest impediment for supporting entrepreneurs. And we as government have to have skin in the game. So what I've done in Zimbabwe, every year I allocate a budget line to support what I call the National Venture Fund, to fund startups, the riskiest of startups. As you know, with startups, only 1 in 4 succeed. So you have to be ready as a Minister of Finance to write off the budget for the other 3 that have failed. It comes with the territory. Not everything succeeds. 4, inclusive strategies, diversity, sustainable practices, and supporting local communities to enhance economic resilience and community stability is critical. We're a region afflicted by climate shocks, and I think that as governments, we should make use of insurance products to support the resilience of our communities. We have been running pilots here in Zimbabwe to see how we can you make use of insurance to insure against climate change. Farmers pay just a little, which is subsidized, and a lot more in terms of payout due to crop failure. So far, we've covered 10 districts. We're progressively moving towards the full number of 60-odd districts. To succeed, we must embrace a simple truth. No one can do it alone. Governments, business, philanthropists, and development banks each have a role. And only through collaboration can we achieve our goal. Governments are the architects of reform, crafting the policies and regulations that drive progress. They are also engineers of investment, leveraging their resources to finance essential infrastructure. Yes, colleagues, let me pause here and say a word about regulatory costs. What we are noticing across our region is that regulatory costs are so high and are increasing the cost of doing business. As governments, we must slash these regulatory costs. We've done some analysis, for example, I won't say which sector, where we find that if the players were to comply with all our regulatory costs, none of them would be in business. They're only in business because they are not complying with the regulatory requirements. So really, these should be slashed. And often the public then confuse regulatory costs with taxes. These are not taxes. These are agency fees for over-regulation, in my view. Honorable ministers, distinguished governors, ladies and gentlemen, before I move to the business of the week's meeting in more detail, allow me to highlight some of the progress we have made over the past year with the support of the SADC Secretariat, and thank you, Executive Secretary, and our partners. I will highlight progress on two areas, some of which the Executive Secretary has already mentioned. The first one is on the operationalization of the SADC Regional Development Fund, and two, the inclusion of the anti-money laundering and combating financing of terrorism, AML, CFT, in Annex 12 of the Finance and Investment Protocol. During the past year, Zimbabwe has been at the forefront of providing strategic guidance and leadership in finalizing the SADC Regional Development Discussion Paper, which represents a critical step towards the full activation of the fund. The decision of the Ministers of Finance and Investment to operationalize the SADC Regional Development Fund by means of a standalone special purpose vehicle, SPV, with a permanent capital structure was endorsed by the Council of Ministers at this meeting held in Zimbabwe in March 2025. As a country, Zimbabwe is committed to fast-tracking the ratification of the 2016 agreement on the operationalization of the SADC Regional Development Fund. We also encourage all member states to expedite the signature and ratification of this crucial agreement. Its entry into force will signal our collective dedication to regional economic integration and strengthen our capacity to implement the fund effectively. So please, colleagues, let's all push forward with ratification. Let's conclude this. It is holding back the full operationalization of this fund. The Anti-Money Laundering Committee, in collaboration with the SAMLAC Secretariat, has successfully completed the review of Annex 12 of the Protocol on Finance and Investment. This review incorporates provisions of countering the financing of terrorism, CFT, and countering proliferation financing, CPF, while aligning the annex with the FATF recommendations. Honorable ministers and distinguished governors, our meetings in the next 2 days will consider a number of issues, including reviewing progress made in the implementation of our decisions and strategic programs for the region as articulated in the Regional Indicative Strategic Development Plan. Notably, the operationalization of the SADC Regional Development Fund, the Project Preparation and Development Facility, the review of Annex 12 of the Protocol of Finance and Investment regarding the anti-money laundering and combating financing of terrorism, and the status of signing of and accession to SADC protocols and legal instruments. We'll also consider the outcome of the cross-border third-party motor vehicle insurance schemes, as well as progress report of the Committee of Insurance, Securities, and Non-Banking Authorities, or CISNA membership. Honorable members and distinguished governors, our meetings will also consider the global geopolitical developments which present challenges for the SADC region. potentially disrupting economic stability in the region, hindering regional integration, and threatening the macroeconomic convergence program. The increased intensity of trade tensions characterized by the reciprocal tariffs among the advanced and emerging market economies, which have also affected developing economies, is likely to weigh down on the growth prospects of the SADC region, particularly for the resource-intensive countries. For instance, the drastically higher tariffs imposed by the United States on imports from most economies could have direct and indirect effects on the export earnings of the SADC region. SADC economic performance mirrors the global economic ties, which are changing in ways we have not seen before. Due to the recent shocks, such as the COVID-19 pandemic, conflict in Eastern Europe, and the other ongoing geopolitical tensions, some countries are reevaluating their trading partners based on economic and national security concerns. Foreign direct investment flows are also being redirected along geopolitical lines. Some countries are reevaluating their heavy reliance on the US dollar, for example, in their international transactions and reserve holdings. Given the recent history of events, policymakers are increasingly and justifiably focused on building economic resilience. But if the trend continues, we could see a broad retreat from global rules of engagement, and with it, a significant reversal of the gains from economic integration. Honorable ministers and distinguished governors and executive secretary, in these meetings, we'll also review the peer review reports of the Republic of Angola, the Democratic Republic of Congo, and the Republic of Zambia, as well as economic policies and performance of other member states. This allows us to assess our progress towards achieving macroeconomic convergence, identify challenges, and share best practices. Our role as reviewers is not just to identify shortcomings, but to provide constructive feedback that can guide policy adjustments. Therefore, we are here not just to hold each other accountable, but support each other in our shared vision. Hence, the process demands honesty, openness, and constructive criticism. Notably, regional economic performance suggests that member states are striving to meet the regional macroeconomic convergence targets, indicating the need for additional efforts to tackle the root causes of our fragility, in particular our weaknesses that are amplified by the external shocks such as ongoing geopolitical tensions, climate shocks, elevated debt levels, and fluctuation of global commodity prices, which negatively affects member states' economic performance. The SADC region's economic growth continued to be affected by El Nino, induced severe drought conditions, characterized by delayed rainfall, prolonged but dry spells, and record high temperatures leading to widespread droughts, floods, and agricultural disruptions. In 2024, for example, the region had a record mid-season dry spell, which has affected vast parts of the region, including Angola, Botswana, DRC, Malawi, Mozambique, Namibia, Zambia, Zimbabwe, basically the whole region. These areas have received the lowest rainfall for the late January to early March timeframe in at least 40 years, so it's quite a record. Furthermore, heavy rains in parts of Botswana, Madagascar, Mozambique, Malawi, and Tanzania cause flooding. Displaced populations cause damage to property and infrastructure. In particular, the government of Madagascar declared a national disaster due to tropical cyclone Gemene in April 2024. In Malawi, floods caused extensive damage to infrastructure, agricultural assets, food stocks, and housing, affecting more than 156,000 people and displacing more than 18,000 people in the east of the country. In addition, torrential rains caused by Tropical Storm Filippo hit Mozambique in March, affecting more than 149,000 people in the provinces of Maputo, Sofala, Inhambane, and Gaza. In view of the above, the region should continue to implement peer review recommendations which remain relevant in this challenging time and inherent stabilization mechanism to absorb and limit the impact of shocks and attain macro convergence targets. Finally, allow me to thank the senior officials for the thoroughness they exercise in preparing our documents. This will make our discussions easier and efficient. I also encourage all of you to take advantage of this opportunity to visit the mighty Victoria Falls and explore what Zimbabwe has to offer. With these remarks, I would like to thank you for your attention and look forward to fruitful deliberations on the issues to be discussed and considered by these meetings. Thank you very much. Muito obrigado. Merci beaucoup. Asante sada. Tinotenda siyabonga.
Thank you. Thank you, Honorable Professor Mthuli Ncube, for those powerful and insightful remarks. We have now come to the end of the official opening of this meeting, meaning now we are going to break just for a photo session. And the photo session will include the governors, the high table, the governors, the deputy governors, and the head of delegations. Then from there, we will proceed for a tea break for 15 minutes, and then the meeting will proceed in closed session. At this juncture, I will also then request the media to dismantle their cameras, and also, but you don't need to remove your tripod, just to take off your camera, and then you can come back later if the closing section is going to be today or tomorrow. It will depend on the deliberations. I thank you. We'll then proceed for a photo session.